All right, let's go ahead and have a seat. We're going to go ahead and get started. And I do apologize for the delay. I'm waiting for one more confirmation. I hope that you got a chance to get to know each other and network. And thank you so much for being here. It's a great topic. And so, how is the food? At least I have to. I'm being told to kill some time, so I'm not a stand-up. So sorry, I don't have jokes for you. Right? Yeah. Knock knock. Right? We're good. All right. So with that, I like to welcome all of you to the Better Business Bureau. And my name is Eduardo Borges, and I am the Director of Business and Entrepreneur Engagement for the Better Business Bureau serving the Pacific Southwest. In my role, I get to be able to support not only our office here, our campus in Arizona, here in Phoenix, but also get an opportunity to work with all of our other campuses in Prescott, like Havasu, Yuma, and our two campuses in California, San Diego and Newport Beach. Um, in my role is be able to partner with many of you, and we're excited to have partnered with Snell and Wilmer, who is going to be here to talk about the importance of the BOI. At Better Business Bureau, we're not only here to continue to support a good, ethical, and trustworthy marketplace for everyone, but also being an opportunity to put on education forums like this, summits, and create programs that help businesses at all scale and a little bit touche, but to make them business better. Okay, so today the topic is going to be led by our attorney or the attorney Brian Bird from Snell and Wilmer. And we're excited, Brian. Thank you so much for being here and educating us on this important mandate, right? This requirement. And for all of you here, if you work with small businesses or any business for that matter, this is great information for you to share. After the presentation, we'll have a small break, and then we're going to be able to have a panel with Mario Aniles from Aniles and Company, a CPA here in the Valley. So, Mario, thank you so much for being here. And we also have Alex Hopel from Venture Cafe and Carolyn, who are going to be joining him with respects to kind of talking about their experience with this. And I also want to highlight and give a special thank you to Gabriel Gascas from for Midwest Regional Bank, who is our sponsor today for our food and for being here. So thank you so much for being here, Gabriel. So let's give him a round of applause. So without further ado, I'm going to turn it over to Brian. And Brian, thank you so much.
All right. Everyone hear me okay? Oh, is it next? Oh, there we go. All right. So we're going to talk about the Corporate Transparency Act. How many people are familiar with it already? Raise your hand. How many people have done a filing? Anybody? We got 1.5. Okay. So I'm just going to jump right into it here. This presentation will be available if you're interested. So take a card or give me your card and I'll send it out to you. You can have that as a reference piece. I think it'd be helpful to have that in hand as you go through the process. So as mentioned, I'm a partner at Snell Wilmer. So I run our firm's emerging business group, get to work with entrepreneurs kind of all shapes and sizes, probably of equal, if not more importance. I've been on the board of the Better Business Bureau for more years than I can remember. I think maybe 14 or so. So it's been a great experience, very supportive of the mission. I get to see what happens when people don't behave ethically. It's not pretty from the legal side, so we encourage everyone to do what's right in the business world. It's good for business and good for the community. So on tonight's agenda, we're going to talk about the purpose of the Corporate Transparency Act, who needs to file, which is probably everyone sitting here today, unless you fall within a limited exemption category. Filing deadlines, what is this beneficial ownership information report that you may have heard about? What must it contain, and what are the penalties, which are pretty onerous if you fail to do it on a timely basis or do it correctly. We've got time for questions, so if you want to throw some questions in, feel free to do that. We're also going to have the panel discussion, so we can ask some questions there as well. And if you want to chat kind of offline, again, feel free to reach out after the program. So what's the purpose of the Corporate Transparency Act? So it became effective January 1st of this year. And the purpose is well-intentioned, right? It's designed to combat money laundering and bad things happening within the economy. So that's the purpose. And unfortunately, as with lots of regulatory stuff that gets implemented, the solution is not quite a good fit with the intention. It's going to cause lots and lots of pain to an estimated, I think it's might be on the next slide, but maybe 32 million businesses, small businesses in the U.S. So typically the bad guys don't follow the rules, right? It's not the case that you put this into place. Many of you haven't heard of this, and that's what we're finding with lots and lots of business owners. I'd say maybe 5%, 10% of the folks that we talk to say, yeah, I've heard of it. Of those that have heard of it, maybe just a fraction of those folks actually know what it is, know that it probably applies to them or it does apply to them, and have taken any steps to do any filing unless they've kind of reached out to their friendly neighborhood attorney or their accountant or someone who's got more information and has given them the guidance to go ahead with it. So, but again, it's as the title suggests, designed to promote some transparency, all good stuff. It's just a question of how it's been implemented. I'll start off by saying I don't think it's going to survive, at least in its current form. We're already seeing a host of areas where it's just not going to work in terms of implementing, particularly when you see how crazy the penalties are, which I think we saved the best for last. But there's lots of things that haven't been thought out. Again, not with legislation of this type, you're always going to have some issues with it, and those are already starting to crop up just in the first few months. So I think they're going to have to change it for this to work. So if there's any way to move that little piece there, I don't know. So basically, it comes down to making mandatory disclosures about the entity's beneficial owners, and that sounds easy enough. If you're in the room and you say, hey, I'm a sole owner of my business, then that might not be too bad. But as you get into more complicated entities, and some of you will bring in partners, you'll bring in investors, you'll bring in people who you give some ownership to in the company who, maybe your employees or other participants. You may be the owner, but other people participate on the board level, or they participate as officers, and all these folks may qualify as part of the people who have to report. All right, so who does it apply to? It applies to whether you're in a corporation, an LLC, a partnership, etc., any entity that is created by filing with the state. Not too many people doing partnerships these days for a whole host of reasons we won't get into. So really, almost every business is a corporation or a limited liability company, LLC. Anyone not in one of those forms here? Okay, that's what I thought. Nope, not in one of those. Partnership? No entity. Okay, okay. So you may be able to avoid it, but there's other reasons you probably should not be a sole proprietor we can talk about. Oh, my clicker stopped working. So if there's foreign entities, and some folks may have done business in another country, and if they've registered in the United States, so let's say you formed a company in Mexico or some other country, and you qualified to do business or registered in the United States, you would also be part of that mix. So that may apply to some of you, and that's weird, can't forget that. So there are 23 exempt categories. We are not going to talk about all of them because we'd be here all night, unless you really want to, and then we can and eat some food. But these are the first six: public companies, publicly traded companies. I'm assuming that's no one in the room. Government authorities, banks, credit unions, pretty clear on what those things are and whether they may qualify for the exemption. Depository institution holding companies. So if you're a bank holding company, again, that would be an exempt category. Money services business. Someone was asking me a question about that earlier. That's a little more nuanced as to whether you qualify as a money services business. And then we get into the rest of them. And we will talk about okay, well. So we're not going to go in each and every one. Again, if you have a specific question about some of the exempt categories, again, we can ask questions or talk offline. We're going to focus on ones that are popping up most frequently and ask in kind of generating the most common questions. And those are the large operating company, the subsidiary of exempt entities, and the inactive entity, which you would think is pretty straightforward. If you're not doing business, then you don't have to qualify or file this thing. That's unfortunately not the case. Any questions so far? Okay. So the large operating entity exemption. So some of you may have had your company for a while. Maybe you feel like you're a larger company. So do you qualify and get to avoid the pain? Well, you have to meet all these criteria. So you have to employ more than 20 full-time employees in the United States. So if you have employees not in this country, they won't qualify, but 20 full-time in the United States. You have a physical presence from which you conduct business in the United States, not just a P.O. box or some other, sort of token presence, but an actual presence where you do stuff. And then greater than 5 million, I'm not sure why it's cutting off there, but greater than 5 million in gross receipts or sales as evidenced by the prior year's federal income tax return. So what's the goal of filing your taxes for those accountants or CPAs in the room? Is it to show as much revenue as possible and pay as much tax as possible? No, right? It's to show that you've not generated as much profit as you otherwise would and pay as few taxes, certainly as a small business. So there may be some potential disconnect of how that looks and is interpreted, but it's 5 million, they're saying in gross receipts or sales, net of returns and allowances. So you have to dig a little bit to make sure that's going to fly. If you meet all three criteria, then you get to not file as a large operating entity. So we would, for example, as our firm, we've got lots of employees and certainly a number of different physical offices in the United States and revenue that would exceed that, so we don't have to file. So if you meet that category, all three, you're carved out from that. I think we missed one. No. So inactive entity exemption. So you have to meet all these criteria, and including that one that's falling off the screen. So if you were in existence before January 2020, so if you formed a company, let's say, after in 20, 21, 22, even 23, and lots of people do this. We see lots of companies formed and they're shell companies, right? They don't do business, or they gave it a shot, right? The startup company gave it a shot, didn't do anything, kind of shut it down. That all can happen in a 2 or 3 year span, right? Most startups go out of business within the first 3 years. So you're saying, well, geez, that's me. Well, it's not you, at least for purposes of this exemption, if you didn't form the company before 2020. You can't have engaged in any active business. So if you did anything at any time, that's not going to work. If you're not directly or indirectly owned by a foreign person meaning human, entity, etc. So that has to be the case as well. No change in ownership in the past 12 months. So oftentimes you see entities go dormant and then they redeem out their owners or kind of come down to a couple of folks. And again, that wouldn't qualify. You can't have, and this is what's killing lots of folks, in addition to the time qualifier, you can't have transmitted or received more than $1,000. Well, typically when the company's in shutdown mode, you have at least a couple bucks in the bank to pay your CPA or your attorney to kind of shut things down properly, maybe pay the state to, get you dissolved and so forth. So having $1,000 in the account is almost standard in any company that's even alive, because they've got to, do a few final things. So it's pretty rare that a company that did anything is going to have nothing in the bank. And then the bottom one says, no assets in the United States, abroad, including any, I don't know what the rest of that says. No, hold on one sec. All right, so that last thing says no assets in the United States or abroad, including any ownership interest in any other entity. So if you've got, a subsidiary, if you've got any assets anywhere in the U.S. or abroad, again, not going to qualify. And most startups, unless you form the company and never touched it, which does happen, you may qualify. But typically there's some activity, there's some assets. Hey, I threw some money in, I threw in some equipment to get started. Again, it didn't go anywhere, I shut it down, but that's not going to let you qualify. So most people get real excited when they see the inactive entity. We've seen very few people qualify, at least in the experience so far, in that category. So if that's you, great, but you'd have to meet all 6 criteria. Then we go into the subsidiary exemption. So people say, well, I've got a number of companies, and lots of entrepreneurs do that, or small businesses. They've got maybe a holding company and they've got a couple companies below. Maybe they have a couple companies because they have an operating company and then they bought a piece of real estate and they lease or license that property, or maybe it's equipment to their operating company. So they've got 2 or 3 entities in play. You may say, well, can I qualify under this? I know maybe I've got to file for the holding company, but can I get away with the subsidiary exemption? So in this case, you've got to meet a couple criteria. One, the ownership interest are controlled or wholly owned by an entity that's exempt in another category. So your top entity has to be exempt, but you can't be one of these 3 things. So if you're one of these 3 things, you still have to file, right? So if you fall into the money services business, which again, a little nuanced, pooled investment vehicle, you would probably know if that was you. Or if you're this inactive entity, that's not going to qualify. Any questions so far? I suspect most of you probably need to file. Anyone feel like they can go leave right now? No? Get some food? No? Okay. You have to be all 6, you have to qualify. Yeah, so if you miss one, you're out of luck. Yeah, yeah.
But let's say somebody just closed now, where their business closed.
Still, you have to meet. Yeah, if you just shut down this year, chances are you're going to have to file. Yeah, yeah, yeah. Oh, sure. Yes. So the question was, if a business kind of shut down, recently, do they still have to file? And chances are, if you go through these 6 criteria, they're going to trigger at least one of those and probably have to do it. Yeah. It's really going to be a company that either completely shut down and liquidated everything and is just sitting around, which is pretty rare, or it's someone who formed an entity and they just never did anything with it, which we do have, people who do that once in a while. Hey, I'm going to use this company. Never did. It's just sitting there. That might be the case, but it's the exception rather than the rule. Okay, so what do you have to, or when do you have to file it? So again, nothing's easy. It gets a little tricky. So if you formed the entity before this year, you get till the end of this year. And don't wait till the end of this year to do it if that's you. I assume most people, is anyone formed after this year started? Anybody? So everyone formed before January 1st? Okay, so you have till the end of the year, but don't wait till the end of the year, because you may find it gets a little trickier than you think. Maybe it's easy, but better just to knock it off if you can. If you form this year, you get 90 days, right? So you get a little extra time. And then starting theoretically next year, it's kind of like that little starred thing on your license they keep extending, and I hope I never have to get, to get into the airplane, but I still haven't gone down to the DMV because it would take me all day to get that little sticker. I think they'll extend this because 30 days is just simply not enough time practically to anyone. No one's paying attention to that. 30 days goes by quickly, particularly when you're starting, a company. And I think lots and lots of people will not make that deadline. So you may see that extended out. We'll see. But that's one area that doesn't make a whole lot of sense. Even more good news, you have to update, right? So it's not just a one and done. Anytime there are some changes, and we'll talk about how there could be changes, and this is where it really starts to fall apart, because good luck getting the information if you have multiple participants, because some people simply aren't going to want to give you their stuff. And when you see what the stuff is, understandably, people say, well, geez, I don't want to give you that stuff, and we'll save that for the next slide. And if they don't give you that stuff, how do you file? And then how do you know, if say they gave it to you, how do you know when they did, and I don't want to jump the gun, one of these things that triggers a change? Again, impossible for you to navigate. So I think that's going to fall off the screen again. So the update includes change of name or address for the company. You'll know that. Change in a beneficial owner. You're probably not going to know that. You may know that. but you won't know the change in name, address, or unique identifying number because you're going to have to upload some evidence, whether it's a license, passport. How are you going to know? Do you know in your own company today if one of your key people leaves? Well, maybe you do because they say, hey, send my paycheck to another address or something like that. But typically, I'm not updating that type of thing unless, you know, there's a reason to do it. So people move all the time. I'm never going to tell people when I get a new license. Why would you ever think to tell people that? It's just not going to happen. And so that document, if it's not updated, you've violated the rules. So you can start to see how crazy this gets with the requirements, not just to do it, but then to update it. It's unwieldy. And you're trying to think about it from a legal perspective. How do you require people to do that? Well, you can bake into the documents that govern the company. Hey, if you're an owner, you have a representation to do this, a covenant to do this. And so you're at least theoretically required to do it. People aren't going to do it, right? They're either not going to remember or they're not going to want to tell you. Either way, you're not going to get the information that you need. And as we go through this, for some more complicated companies, you'll see that it gets even more challenging. All right. Yep. So, I mean, if you have till the end of the year, so if you haven't filed and you do some stuff, probably makes sense to do the stuff and then file once. Does that make? No, you'd still have till the end of the year. So if you haven't made your first filing, so the question is, you know, he's formed before this year started. It's going to have to make a filing by the year end, but it's going to change an address or do something that normally would require an update. So if you haven't done the first filing, probably the best approach would be just do the changes, then do the filing, assuming it happens before year end. Save yourself a step. All right, so what is this crazy beneficial information ownership report? So it contains information about the company and its beneficial owners. Company's easy, beneficial owners sometimes easy, sometimes not so easy. The good news is, unlike with a lot of kind of government stuff, don't attempt to go on and interpret the IRS code, but this is one of those areas where they actually did a pretty good job, and you can go online and you can download the PDF. I didn't bring the full volume, but you can download the PDF document, and it gives you kind of a good, fairly user-friendly description of how to navigate through this. Now, there's still going to be potentially lots of questions depending on the complexity of your company, but at least it's a good start as to how to navigate through that. So I encourage you to check that out. The system itself, you can go to and you can either do a PDF or you can just go an online filing. The online thing is probably easier to go through than doing the PDF upload, but either way. And what do you have to have in it? You have to have company information. So that's the easy part, right? The company's name, including any doing business as names. So sometimes your LLC is not the same name you use for your marketing. You may have a number of marketing names, so you've got to put all those in. What state it was formed in, that's easy. The physical address, tax ID number, all easy stuff. The applicants, well, what on earth is an applicant? So people forming the company, and we'll talk about this in a little more detail, but people responsible for preparing and filing the documents. That may include your friendly neighborhood attorney. It may include the statutory agent if you filed in another state. You formed your company in Delaware, Nevada, another state where you're not at. Typically, you're going to get and have to get a statutory or a service company to do the filing. There's going to be a human being at that company that's going to be one of your applicants. And then your beneficial owners, which that's the most challenging part of this. The beneficial owners are anyone who owns a certain, I'm sorry, it keeps falling off the screen there, but the kind of meet two categories, one of two categories. Either they have 25% more ownership of the entity. So that's typically straightforward until you look at entities where there's multiple layers of owners, and we'll give a couple examples. Or they exercise substantial control of the entity. What does that mean? Well, that can mean lots of stuff. So who's an applicant? There's two categories, and you can only have two applicants. One category is someone who created or directly filed the document that formed the company, right? So it's going to be the either the attorney, or it could be you, or it could be a service company that go ahead and does the filing. You have to figure out who that's going to be or who that filing is made by. And then someone who prepares and is responsible for the filing. Again, a maximum of two. So often it's going to be, it could be the attorney and it could be the service company. It could be the service company and you, because you put the articles together yourself. Some of you go on and use the Arizona Corporation Commission forms, which are a little tough to navigate, but sometimes you do that, and then you put those forms in. So that is going to be up to two people, and you need to get that correct. And if this happened a long time ago, see, that's another place where this is kind of fallen. What if you formed your company, 10 years ago, and you can't remember who filed it for you, or you can't get in contact with those individuals, right? Think of folks who've been around for, it could be 5, 10, 20 years. You sort of remember the name of the attorney that may have helped you, but they're long gone. Maybe they're retired. Maybe you can't get in contact with them anymore. Maybe you had some service company, do the filing, but again, the person who did it is long gone. So what do? These are more things that are popping up and are presenting challenges. So here's an example, and for time's sake, we won't go into all these in excruciating detail. Again, you can get a copy of the program to read up on some of this, but individual A creates a new company. They prepare and do the filing. No one else is involved. That person is going to be the applicant, and there won't be any other applicants. And the second example, you end up having two applicants. You've got individual A and B that both participate. One creates the company in terms of preparing the documents, and the other files it. So you have two applicants in that situation. If you do it recently, again, all the service companies, legitimate service companies, other people they know you're looking for this information, so they're ready to give it to you. You call up, Paracore, one of the service companies, to say, yeah, Bob is the one who filed it. Here's his number. Go ahead and get his information uploaded. So they make it fairly easy. It's the folks who did it a while back going to be a little more challenging for. So who's a beneficial owner? Substantive control. We could spend, next couple hours. I think there's still some food left, so you might want to get a couple bites. But substantial control doesn't just mean the person who owns the company. You're sitting there saying, well, geez, I'm 100% of the stock. That's just me. Well, it may not be just you. It's anyone who has, and here's some examples. They're on the board. So people who have a board. Well, what if it's just an advisory board? That may not count. But some people, even though they own 100% of the company, a family business, put in place a real board who has some power, take some votes. Those people probably would count. Again, you have to look at your specific situation, but probably would count. Or if they have some rights associated with financing or other interest. And again, for time's sake, we won't be able to get into all the nuances, but that is another situation where they may deem that person or entity to have some control of the company. There's indirect ways, and we'll talk about those in a couple of these charts that they put into the thing I'll put up on the screen. So there may be other entities acting as intermediaries indirectly that have control of the company. And at the end of the day, what they're looking for are humans. So you have to figure out, that's the other thing people are kind of getting tripped up on. Well, I've got owners, who own 25% or more of my company, but they're entities. So am I going to put the entity, maybe you own 75% of the LLC and someone owns, 25% of the LLC. I think that's 100%. And you say, well, the 25%, is an entity. They invested through their corporation or through their trust. Well, unfortunately, that doesn't work. You've got to go through and figure out who owns what at the top level. So just think about that for a second. Again, this is where it really starts to fall apart. If they're investing in your company through an entity or a trust or something else, they're doing that for a whole host of reasons. One, they might do it for that's their business model. They might do it for tax purposes. They might do it because they've got a whole host of investors in that company, and they're not real excited about giving you kind of a peek under the curtain as to who owns what in that. They're just saying, we're not doing that. And that's coming up over and over and over again. And so lots of folks who, again, start out kind of a sole owner situation, start to take on capital or other participants, all of a sudden find themselves with people, at least according to these rules, that now they're asking, hey, can you tell me who's all involved? Well, I'm not doing that. Why not? Well, because that's our secret. We have an expectation of privacy among our investors. We won't give out the list. Well, you're required to do it. And they are required to do it. We'll talk about that in a minute. but no one cares. They're simply saying, we're not doing that. And you're going to have to go figure it out on your own. So what's the beneficial owner? Again, for time's sake, we won't go into all these charts, but they do provide these in the beneficial ownership manual that they put out. Again, it's actually a reasonably helpful governmental document. And they go through and ask different questions, and some of you may not be able to see that, but they're saying things like, does the company have officers, president, CFO, et cetera? And you go through this list, and it'll tell you as you go yes or no, it'll tell you whether they qualify as senior officers or other people who may make decisions, because it's not sometimes not just the officers with official title, it may be others empowered to do key things in the company. So again, it starts to get pretty complicated, not just, well, I'm going to name the C-suite, or I'm going to name the board, I'm just going to name the president. It could be other folks who exercise control in ways that, at least for purposes of this law, qualify for the filing. Oh, okay. How much time we have left? Oh, okay. That should be plenty. Yeah. So who's a beneficial ownership? 25% or more interest. So that sounds pretty easy, right? Everyone owns 25%. Well, and they have a nice little chart that tells you can go through. Again, some of you may not be able to see that. It's kind of tiny. But it talks about, and we'll go through different types of ownership. So sometimes you give out capital stock, shares of stock in your company, right? Common stock, preferred stock. Sometimes you give out ownership interest in your LLC. Units, typically we do, or sometimes it's a percentage interest. But you also may do things like convertible notes, or you may do warrants or options or other things like that that aren't quite equity today, but they could become equity. They could exercise that stock option or exercise that warrant or convert that promissory note into equity. And again, I know we're starting to get complicated, but that's the point of this presentation, is it's not just as easy as it sounds. So if you're someone who's got some of those things, or maybe you don't have them today, but maybe you do in the future, you have to factor those into as to whether those qualify as that 25% or more holder. You got to take a look at the collective group of participants. So here's some, that's weird. So here's what they give some guidance. So if you've got, let's say, stock options, and most people probably at least heard of stock options, if you don't, even if you don't have them in your company, you say, hey, I want to incentivize my employees. I put a stock option plan in place. I gave away X% to these various employees. So when you're calculating who owns up to 25% or more, you have to assume that all those stock options have been exercised. So let's say you gave out 15% of the company in stock options, but none of them have been exercised. Typically, they're not. They just sit there and people exercise them when you sell the company. But let's say there's 15% out there. Those will now count in your math. You say, well, we've got 85 shares, just in hypothetical outstanding. We've got 15 shares issued in stock options. For purposes of this, you've got 100 shares issued because you assume those 15 shares get exercised. Now, when you want to meet or see who meets the 25% threshold, it's 25% or 25 out of 100, not 25 out of 85. Does that make sense? I know it's getting complicated, but that's the fun of it. So if your company's a corporation, they give you a little chart, again, to help guide you as to how to calculate that, so you can take a look at that. But it looks at all classes of stock. It looks at total voting power, and it comes up with an individual's voting power or interest. And if it's an LLC, that's, I think you can still see that. LLC gets a little more complicated. People say, well, geez, there's capital units, there's profits interest, if you've heard of that term, or service units we might give out to people who work for the company. All that's going to count. So some people assume, and I do lots and lots of operating agreements, people say, well, those profits interest, those aren't real, that's not real equity. What is apart from this rule, and it is for this rule, so that counts toward calculating what's part of your 100%. So here's I think these charts are kind of helpful. We're going to get some audience participation. So here is a hypothetical reporting company, and you see there's two individuals that own, hopefully I can see that, but one owns 50%, one owns 40%, one owns 10%, and then there's individual D up at the top who is the president. So who wants to take a guess? So 50 and 40, you would say, are beneficial owners, okay? Plus the president. Why the president as well? Has control. Okay. And not C because under 25 and doesn't appear to have any other role with the company. So that was an easement. We got that right. So you both get an extra raspberry over there. There you go. All right, what about this one here? So you've got 50-50 ownership. That's a common type structure. We love 50-50 partnerships because they typically fight with each other and end up in a litigation group, but it's good in theory at least. So 50-50 and an individual A as a manager, and then you've got individual C as a manager. So in an LLC, typically your managers are, it's like your board of directors, but we call it a board of managers, and you may have one or more parties participating. Sometimes they're owners, sometimes they're not. Who wants to hazard a guess at which one of these parties would qualify as beneficial owners? Anybody? A, B, and C. Okay. No? Anyone think not A, B, and C? Just A and B? How many people say A and B only? Okay, how many people think all three? Okay, so the all three folks can go get a snack. So individual A is a manager and owns 50%, so they qualify twice. Individual B, 50%. Individual C, manager, so they each qualify once. So it's A, B, and C. All right, here's the final participation here. We'll give you 25 or more minutes to figure this one out. So this is a bigger company. It sounds like, well, geez, that's never going to be me. Well, it could be you if you bring in some capital. It wouldn't be complicated or I should say unusual for, let's say you formed a company to own interests. You have a holding company, right? That's company Y, and you own 50% to start, and then you bring in a partner, right, who also buys half the company through their company. And so now you, company Y, that's your company. Company Z is your investor's company. And now you each hold 50% of the company, or it could be some other percentage. But the issue is that different people own those companies. And so the companies aren't the beneficial owners that you want to file on, right? They have to go to the humans. And so good luck figuring that one out. Different percentages of stock, but it's indirect, right? So when you're calculating it, it's 30% of 50 or 70% of 50. And then you go on that next one, it's 25% of 50. And then on top of that, you see some people are officers, some people are not. So who wants to hazard a guess at which of these various individuals, A through F, you get the grand prize if you guess correctly? Anybody want to guess which ones qualify? Who says all? That is not correct. Everyone but D&E. Who thinks everyone but D&E? Everyone but D&E, raise your hands if that, you got one person. What other guesses? It's not all. We had the guess that's everyone but D&E. That's 12.5%. That's right.
So they're not qualified, but they need the individual, so probably head there, or acting manager, the CEO, the CFO here,
Okay.
right? And the 70% probably is more than 25%,
Okay.
because this is the other one, but it says CFO again, so the other one.
So what's your final guess? And just to confuse you a little more, notice that there's A is owning pieces of both companies, right?
Correct.
Yeah. So it owns 30% of 50. I'm not a math guy, so you can figure that out. And then plus the 12.5% over there. So.
But individual A is the same person? Are we talking like?
There's two individual A's. They own.
Correct, but I
Two.
mean, is this
Yeah.
the same? It's one person?
It's one person, individual A. Yeah. Because there's C that says they're CFO. They're the CFO. Yeah.
I see. So that means probably A for sure, and B for sure. I kind of individual is not part of the medical corporation, do they have to?
It-
They are part of the administration.
Well, yeah, so that's a good question. So she's saying if they're part of the administration, if they're an officer, right? Is that, yeah. So the answer is, and I think someone picked up on this a few minutes ago, all the beneficial owners are in the circles, right? So if it's a circle, that's their little key for beneficial owner. The triangles are not beneficial owners. So A, because I think the stock adds up plus their CFO. B, the stock, right? 70% of 50 is more than 25%. Individual C doesn't have the stock, but they're CEO and president, so they would qualify. D and E just own stock that's not only 12.5%, they don't qualify. And then F doesn't own any stock, but that person, it says, makes important decisions through the board of directors or board of managers. So, wasn't that fun? So to the extent that you have a company, and again, good luck getting company Z, for example, if they are not a company that you have participation in, to give up this information. And it could go, several tiers, even above and beyond. Could go several tiers above and beyond just that. I mean, we've seen examples where there's 5 or 6 tiers up, right? And then they really don't want to give you the information because again, it's bound together by lots of folks who expect to have privacy and what their participation is, et cetera, and they're just not going to give you the information. So that seems like a complicated one, but we're seeing charts that are much more complicated in terms of the org structures.
So isn't the company Y and Z, those both also need to file?
No companies file, it's just humans
Right, but I mean.
as subsidiaries. Well, they may. So that in this hypothetical, they're just looking at this as the reporting company up here. But that's a great question. Each of those companies would have to do their own analysis as to whether they would need to file. Yeah. They might not be. Yeah. Yep. All right. So these people are not beneficial owners, minor kids, question?
If there's some, for example, is yet, well, the employees part of that.
That's a great question. I don't know the answer to that. That's a great question. Yeah, I haven't seen that yet. So you would think if it has to go through the humans and each own little teeny pieces, maybe not. Maybe not. Yeah, it's a great question. Sure, sorry. The question is if you have an ESOP, right, which can be owned by all the employees in the company and they each own little teeny pieces of the ESOP, if you're looking to go through that trust, typically in a trust, and then they own little pieces, maybe one person owns 0.5%, one person owns 0.25%, but it's spread over all the people and no one gets to the 25%, then from an owner standpoint, you could have a situation where no one owns more than 25%. So that theoretically could be possible, and then you're still having maybe the officers and board members be participants in that. So that's a good question. So these people are not beneficial owners and don't have to file. If you have minor kids, that's nice. They let them out. They don't have driver's licenses typically. If they're kind of a custodian or agent, a good example, they gave us a tax advisor, they're not going to participate. And then the employee, if they have substantial control, but they're not a senior officer, and their control is solely by virtue of their status, and again, they're not maybe a CFO or not a CTO, et cetera. And then someone who's going to inherit an interest but hasn't gotten it yet. So that's nice. You don't own anything yet, but mom's going to give you her business. And so when you get the business, then you can have fun here. But until then, you're off the hook. So what must they disclose? What must every human, right, that qualifies disclose? Well, here's the stuff. Name, okay, not a big deal. Date of birth, sometimes people don't want to give that out. Address, maybe people don't want to give that out either. And certainly they're not interested in giving you their driver's license or passport for you to upload. It's not just getting a number, it's actually uploading the document. And you can, and this is what I've done and lots of folks in my position that become applicants, because I form lots and lots of companies, you can fairly easily, and if there's others in the room that kind of do something from that type of standpoint, you can go in and get a FinCEN ID number. It's very easy to do. And then when I have to give out this number to all the different companies I help form, I don't have to give them my stuff. I just give them the number, right? What's the challenge with that? So they got my number. The filing is accurate, but what's the challenge with using the number? Anyone? Well, someone can use a number. That's a good one. I didn't think of that. So someone could use my number in ways that I don't like and I'm not a part of. That's not good. I didn't even think of that. But if the gets more depressing by the minute, and then to the extent that I have to that something changed right within my situation, they're relying on me to have uploaded those changes. If I fail to do that, because now I'd do it because I'm paying attention and thinking about it all day long, but if someone else creates a number, right? Let's say you create a number because you don't want to give the information to the company. You're going to be say, oh, I really don't want to do this, but okay, I'm not going to give you my passport, but I'll create this number. And so you go and you do it, you give them the number, and then you move, right? Or you get a new license or whatever it is, and it changes, and they were supposed to file an updated version. Do they have to do that? Or is the number that you gave them still good? Well, that's the question, right? So your number's still good. The information behind the number's not good anymore. Does that make sense? So, and if you don't get a number and they give you this stuff, they're supposed to, and you're required to, as the owner of the business, within 30 days of any of these changes, you have to refile. So again, how are you going to keep track of and activate within 30 days an amendment, right? How quickly are people going to tell you? They may, if you're paying them, give you their address because they got to, figure out the paycheck or whatever. Sometimes they don't because it just goes directly into the bank account these days. Usually it's kind of just direct pay, and the address may not get updated for a while. And they're not going to think to update you with their passport or government ID. Not that those change a lot, but they do change. No one's going to think to give you that. It's just not going to happen. So there's going to be a lot of information that never gets online. So what are the penalties? And we're wrapping up here. The fun part. So if you willfully provide false information or fail to make the report or an updated report, here's all the good stuff that happens to you. 2 years in jail. That sounds fun. $10,000 fine, $500 for each day the violation continues. So they're obviously taking it seriously because they don't want the bad people to do the money laundering. Again, good intent, but to the extent that you are a small business, how would you like a $10,000 fine? How would that work for you, right? That might put a lot of, yeah, that's a vacation you're not taking, and that for some small businesses getting started, that may put you out of business, right? And you certainly spending 2 years in jail seems pretty harsh, but those are the penalties. Senior officers that fail to file may be held accountable. So if you're sitting in the room saying, well, I'm glad I'm not the president of the company. I'm just, a participant. I've got a title. Maybe I'm the chief marketing person, or I'm the chief technology person, or COO or CFO. But that's not my fault or my issue. It's the CEO, it's the owner, it's their problem. Well, if you fail to do what you're supposed to be doing, you may get swept into those penalties as well. That sounds ridiculous. And one would hope that the government's a little more lenient at that. But again, they're trying to motivate everyone. And this happens in a variety of areas where the senior person is on the hook for things they don't expect to be on the hook for. We see that all the time when people are raising capital and saying, well, I'm not involved in that capital raising process. That's my president. I'm not going to worry about those pesky federal and state securities laws. Well, you find out the hard way you do have personal liability. If they're out doing things they shouldn't, then you were the CFO at the time. You should have been paying attention. So same thing here. I guess you're going to jail, so you better get some food on your way out. But no, you have, right, so you have, yeah, but you have this safe harbor. So you preempted my slide. So a person that can avoid the civil and criminal penalties, if you believe there's been any inaccuracy, you just didn't file, but if there's been an inaccuracy and you correct it, and I think, people are getting some leniency because, out of the 32 million people who probably have to do this, I'd suspect a very tiny percentage are doing it or have done it, right? So to the extent that you are not doing it, the instruction would be do it right away. Now that you know, don't let it linger. And I suspect and would hope that they're going to give people a break, right? This first year, maybe the first couple of years, until people really start to know about it. They're not going to come back and ding you for you filed it 120 days as opposed to 90 days, right? But I would certainly go and make it happen as soon as you can. You file and hope for the best, right? That they don't put two and two together. It says that, you know, your company was, yeah. Yeah, I mean, that, look, the chances of them, you know, being able to even capture all the information correctly and then simply, you know, mine it for stuff, you know, it's the government, so good luck. You know, I think you'll probably get away with having filed 30 days late or 60 days late or whatever it is, but, you know, I would just do it as quickly as possible, just so it's not egregious. The longer it gets to be, the more they will potentially put you in this willful category, and that's where the fines kick in, right? If you do it willfully, they're saying, well, geez, it's one thing you didn't know about this, you filed a couple months late, maybe even 5 or 6 months late. To the extent it goes on and now you're into, you know, 2025 and you simply didn't do it, well, you know, we may hold you on the hook. So better to do it than to not to do it. Okay. I think it's just I think that's a normal, I'm pretty sure, yeah, unless they've changed anything that I haven't seen. I think you file it and hope that they don't, you know, put two and two together. So, yeah. And so, as I mentioned, there's good information available on the sites here. So you can check out, you can get the compliance guide, and it's available. It's, you know, I don't know how many pages it is, but it's actually fairly helpful. It gives a lot more of those graphs and those charts to kind of walk through, you know, whether you qualify as a beneficial owner, an applicant, et cetera. It is pretty helpful, unlike typical government guidelines. So get your small entity compliance guide and check that out. I'm going to tell you about a couple upcoming programs. I know some of you have been to these, but do a lot of other programs of interest to the small business community. So if you're interested in attending some of those, feel free to check those out. Almost all are virtual, so you can do them from anywhere. And I'll put up a website after that. And I think we're probably about out of time. Okay. So check out, I think you can see it's sort of at the bottom there. I post all the seminars there, things like this. You can check those out. They're almost all free, all geared toward entrepreneurs of all shapes and sizes, different industries. So if you're interested, check that out. We have one live program we've been doing for 16 months. I know some of you have been to that. We're taking the summer off, but we'll be back at SkySong in September. So feel free to come live to that program. Otherwise, we'd love to see you at some of the other events. So we're out of time. I suspect you probably have more questions, but I think we've got a break coming up. And then we got the panel. So happy to answer some questions during the break if you have them.
Give them a round of applause.
Yeah, thank you.
So what we're going to do is that we're going to go ahead and take a 15-minute break, maybe 18-minute break, right? And come back at 6:45 so that I'm sure you have other questions. We have some questions also from our online. For those who are joining us, put your questions on the chat, and we'll be joined by Carolyn and Alex and Mario, and then Brian will also join us. So in the meantime, 15-minute break. We do have some wine. The wine finally got here. I think we had it. We just needed to get organized. But thank you so much. Enjoy some wine. Please stay, and we'll see you in 15 minutes. All right, everyone, let's go ahead and regroup. All right. So, in this last piece of our education forum, we're going to have an opportunity to ask questions. We have some questions already been sent to me from some of you as you were completing your registration. We have some from online, and to join us here, I'm going to ask Brian to join us in the panel. So, as you know, Brian is with Snell and Wilmer. So let's give him a round of applause, please. And they'll do a little bit of their background and introduction here. And then joining us as well is Carolyn from Financial Coaching. She will be joining us and providing information on, she actually completed this. And so Carolyn, please join us. Thank you. And Mario Aniles, who's a CPA with Aniles and Company. He is also well-versed in the topic. So thank you, Mario, for joining us. And Alex Copel from Venture Cafe, thank you so much for being here and providing insight on this topic. So I was thinking about doing two options or sharing about their bio, right? So I thought that we would start a little bit and kind of just share high level, the name of your company, what your company organization does, and then so that our audience will know. And then we'll start with some Q&A some questions that I already have here, and then we'll open it up for everyone else.
I'm Steve. Great to be here. So you already know what I do. Basically, help entrepreneurs with all their legal issues. So that's it for me.
My name's Caroline Kelly. I am a financial coach with Fit Financial Coaching. I help entrepreneurs and individuals with their behavior behind their money so they have more money and time to do what they love.
Hi, everybody. I'm Mario Niles. I'm a CPA. Been in this field maybe for about 20 years now, and work primarily with businesses. So we deal with nonprofits, industrial, retail, real estate. I think we touch almost every industry. So pleasure to be here. Happy to see everybody.
Hi, I'm Alex Copel. I'm the director of Venture Cafe Phoenix, founding member of Venture Cafe Phoenix as well, and also a small business owner. I help entrepreneurs feel less overwhelmed and do business consulting.
All right. So here's and not everyone has to answer this question. Maybe you can select, but one of the question is any person or company can make an advertisement to promote BOI report for FinCEN. Do you suggest someone making a business out of helping people with this, and should they or should not do that?
Okay.
Yeah.
As a business owner, I would say that would be something I would refer to the accountant and the attorney who can actually have the qualifications to support them. So,
Yep. I would, although it is complicated as you heard earlier. It is, however, there is quite a lot of resources. There's a few resources out there that are pretty good. There's a lot of resources, but there's a few that are pretty good. The website gives pretty good instructions. So it's not necessary to have an attorney or a CPA do this for you. If you have doubts or questions, absolutely, I think it's recommended that you get professional help. In terms of the question whether someone should start a business doing this, I think there's unknowns to how this is going to look in the future. So I'm not sure that it would be a sustainable business because it may change drastically and it may no longer be maybe to the extent that we're looking at it now. So if someone came to me and said, "Should I open up a business doing this?" I'd probably say, "Hold off." Unless it's just an add-on to other things you're doing, hold off. It may not be worth the investment. So I would say, I definitely make sure you access resources and get the professional help if you have questions. But I would first recommend that you take a stab at it. Take a look at the guidance, take a look at the instructions, see if that part's clear enough for you to figure that part out, so that you're not having to pay for the service if it's unnecessary.
So I'll just double down on that as a consultant. I mean, I think it would be helpful to be able to provide guidance to my clients through that process, a lot like setting up an LLC, but I don't think I would make a whole business around it. So maybe an ancillary part of what you're already doing.
All right, thank you. So, it says, why do they need our banking information if our company is an equal share split between family? My spouse is a veteran who gets disability from the VA. Is this new change going to affect my personal income from the company because he gets untaxable income that they would see in our accounts? We aren't hiding money, but his income is separate from my company. So, why do they have to send bank statements is the question.
Yeah, so I'm not sure what they're referring to, but there's no requirement that they give any kind of bank account or bank statement. It's just, their name, address, date of birth, and the passport or license. So good news is that's not part of the requirements.
All right, there you have it. No bank statements. Thank you for that question. I am a business startup consultant who has formed hundreds of LLCs and nonprofits for clients in Arizona and other states. I have a FinCEN number and have also filed my BOI report for my own LLC, but I'm a little bit confused on the FinCEN terminology and requirements for my clients. What advice can you give me navigating through this process?
No, I think that they would probably be an applicant, most likely. So if they've got their number, then they may, be called upon by their clients as they work through the process to say, "Hey, can you give me your number? Give me your information." They may decide to affirmatively kind of track down or advise those clients this requirement's coming due. So that may be something nice to do on their part. But there's certainly, it sounds like just from that question, they're going to be in the mix in each of these customers. Yeah.
No, I would.
All right. On the exception list, specific requirements for money service businesses, is there anything else that we should know if I have this type of business? Not sure I understand the question, but any specific, I guess, exceptions if you have, or let me rephrase the question. Is there anything specific if somebody has a money service business that they should kind of keep an eye on when completing this application?
So there's someone asked this question on the front. I don't know if they're still here, but there's the exception refers to two statutes, and so you've got to take a look at each of those, and there's kind of two categories, and see whether you fall within, those categories. And if you fall within one, you may be in that exemption, not required to file. But the regulation's pretty lengthy, so you kind of got to go and pull those two down, which the person, again, I don't know if they're still here, had that printed out, and they may be the one who asked the question. Kind of go through and figure out if they qualify in one of those two. So with some of these exemptions, it gets, they refer to the statute to say, "Hey, are you qualified?" Some are pretty simple. You're a publicly traded company, okay, but ones like that, there's a little more kind of meat on that bone. So you've just got to go in and digest it. And if you have questions, again, ask your friendly neighborhood attorney or consultant who's advising you.
All right, thank you so much. So I'm going to rephrase this question, so I'm not sure who wrote it, but going back to on creating a business to complete BOIs, is there anything that one should look out to for advertisement on providing this service that maybe it's going to be a scam or some type of scam? Is there anything specific or something that you've seen out there that shy away if they don't have X, Y, or C?
Well, I'll address the first part of the question. I think if someone decides to start a business around this, having the cybersecurity and the safeguards to protect a lot of this very sensitive information is important from a business side. Someone who's looking for these services, I think just like any other, service that you look for, you tend to, see if they're a member of BBB, see if they're, a good plug, see if they're, see if they're reputable, if it doesn't seem like it's a scam. I think that part applies to this business. Nothing that stands out from a compliance standpoint that if they're a business that is that processes, that will process BOIs, whether there's no certification officially that they obtained. So maybe look out for red flags of that sort, that if they say that they're sponsored by, FinCEN or the IRS, that's not true. That doesn't exist. So couple tips, I guess.
And to echo that, I think as a business owner and a consumer, like always knowing what those kind of marketing messages look like. I mean, the basics of, where's the email coming from? Is the language seem, fluent? What are they charging? Are they wanting money immediately? Is there urgency around this? Really understanding and doing your research as to who they are, who's giving you that marketing message, and reaching out to maybe even having a conversation before you do engage.
Thank you. For our next education forum, make sure I have a second mic. Noted. Is this something that you can do independently, or should hire a legal entity? I think we have addressed that question. You can certainly do that yourself. There's a lot of resources, but in fact, if you do need support, you can reach out to Brian or any of our consultants, Mario. Any continuing education credits for this event? Not continuing education credits, but certainly good information. Here's a good question. What about a charitable entity such as a foundation? Are they required, and does the application look differently?
They are not required. So they're one of the 23 exempt entities, nonprofits. So 501Cs. And correct me if I'm wrong, if it's all Cs or just C3 specifically, but I believe all tax exempt entities, right? Yeah. So a foundation, which typically gets structured as a 501c3 foundation, should be exempt. Yes.
And then the last question that we have here, and then we'll open it up for online and here in the room. An income tax office type of business, do they need to register, or do they need to complete the BOI if their business is tax services?
Oh, sorry. I may defer to you, actually. Accounting firms are exempt, so I know I'm exempt. However, yeah, exactly. However, I'm not too sure on the technical definition on what qualifies as an accounting firm. So I don't know the answer offhand. If you're a CPA firm, I can say yes. But if you're not, I'm not 100% on what's defined as an accounting firm. I'm not sure if.
You know who's not exempt? Law firms, which is shocking, because they typically exempt lawyers from this, but that was not among the list. So I don't know specifically, because I haven't had a chance to look into it yet. But yeah, that's like money servicer. You got to look into the definition of what counts as an accounting firm. So you want to dig into that definition. But yeah.
So this is what we're going to do. I believe they should be able to hear me here. I'll try to speak and project. Oh, no, thank you, Brian. So if there's any question here, raise your hand, ask the question, and whoever is going to answer, just repeat the question for our online viewers, and we'll do that dynamic, and hopefully we can answer any questions that we have here in the room.
Question about Yeah, so there's a challenge to it, like there is along, lots of these rules, and so far that's kind of still pending, as far as I know, and it would only apply to that state. Again, as much I didn't look into it in great detail, but I think that's the case. So, if it's usually just generally if a state is involved, kind of state courts, it's kind of limited to that state. If it's in a federal court, it may apply to a number of states. Again, you see these things coming out in the news. The bottom line is assume this is active and assume that you need to file, right? People are saying, well, it got challenged, and so I'm not going to worry about it because it looks like, they're starting to get active, they're starting to sue, and so I'm just going to assume it's not for me. That is a bad assumption. So I would go ahead and do it, assuming it's in place, which it is, until further notice. And, again, I joked about the license thing that I never got. Until I get the notice each year, I'm concerned that I've got to get that by, September 1st. And then I find out, well, it's delayed another year, and then I'm good. So until you get the it's delayed signal, go ahead and assume that 90-day or, end of this year requirement applies.
Access to confidential personal data speak, will that become a public record in the future?
It's not supposed to be public. It's a highly secure government database. So you can assume that your information, was a website probably created by the lowest bidder. But so yeah, I mean, I'm all joking aside, not really. It's not meant to be public. It's just meant to be used for the purposes described. But like any database, it's out there. So that's a lot of people's concern that, hey, just because they're saying it's secure doesn't make it so, and we've all probably gotten subject to a breach and so forth. So that's one of the heartburns that people have, is that I'm putting some sensitive stuff in there. I don't want it to be used for the wrong purpose or taken over by bad actors. And unfortunately, there's no way to guarantee that. But it's not meant to be a public database. So
Apparently, anybody in compliance will go and file. There's nothing to be afraid of. But with the marijuana industry and state legal and state not legal and federal, and people making money left and right. So do you think like whoever is non-compliance, I think they will probably be scared to file? Do you think they will catch them? Like, will somebody catch those people that are non-compliant?
So for those online, the question is, will the bad actors or people who are doing things maybe they shouldn't, will they be inclined to not file? That's the whole point, right? That it's going to make lots of burdens for folks who are doing the ethical thing and doing the legal thing and filing. And for those who don't intend to disclose what they're doing and want to hide, they're just not going to do it. And they're going to, the government would have to literally attempt to track them down, particularly if it's a foreign company who's doing business in the U.S., because remember, that's one of the categories of required filings. They're just going to ignore it. And so it's a lot of burden for folks who are doing the right thing, and not a whole lot, at least in my opinion, just one person, a lot that you're going to be doing to incentivize the bad actors. I mean, 10 grand to someone who's, looting, millions of dollars through the system is not going to be worried about, 10 grand. So.
On that note, I'm going to jump in and ask a question. Carolyn, I know that you completed the process. Can you share with us, how long did it take? Is it really that complicated? Just if you could share your experience.
Yes. So my experience with the BOI as a solopreneur. So I am a solopreneur, and it was about 5 minutes to actually do the process. Probably 10, because I watched. There's a few videos that when Brian gave you the website, there are a few videos that will walk you through it. The information went very quickly. Think the longest time was to download my ID, like you were saying. Like, you have to download the ID. So I downloaded it from my phone and moved it to my email and downloaded it on the computer and all that fun stuff. So that took about the longest period of time. And it just asked general information that I did have on my LLC licensing. So it was not a hard process for me to do. It's really one of those situations when we get into corporate things, I think that you're going to really need to get a little bit dissection in it. But as a small business owner and as possibly a partnership, you're looking at a really easy, smooth process. I think the biggest thing for me was almost a fear of the actual process, is like, oh, well, it's official form and this is the stuff. And what is this? And a legal mentor kind of gave me some information on it. I didn't even know what it was. And that was the scariest part. But now that you know it, it's very simple to do in the process. And it is other things that are within my IRS filings and my LLC filings that are in there. So that really was so it was very simple, very simple. I filed directly onto the website, and it was very simple to do. I did not do PDF. I did the website immediately, and it downloaded. I, yeah. Yeah, very simple to do. It was one step after another, very easy, very clean. Like Brian was saying, it's probably the best government website I've ever seen. And I did work for the government for 20 years. Yeah, and I did work for the government for 20 years before my business. So it was definitely. Have you done any? Just online? Yeah, that's a good question, but no, I'm just online, just online.
So the question was if has anyone in our panel completed the application using the PDF, and the answer was no. A follow-up, and I know there's a question with Rochelle, but a follow-up question: if we do need your services as a consultant, a CPA, as an attorney, does it get really expensive? I don't expect for you to tell me the amount, right? But at least is it just like a regular consultation with an attorney, like your normal consultation fee? If we could just have some information, right? Because I don't know, do I continue doing it and try to figure it out, or is it worth paying the consultation fee? I just thought I asked that question.
I figure it's a $10,000 fine, so if I charge 8 grand, you're still, you're still making a couple grand ahead. No, it's all kidding. All kidding aside, I mean, I mean, if it's just you and your company, it might take 30 seconds and might not even, charge anything. It might just talk to you. If it's more complicated vis-a-vis those charts, there might be a little bit to it. But no, nothing I've seen so far in terms of advising different clients is expensive at all. It's a very quick process. The one thing that people do ask is, do we file the form? And this is going to sound real legalistic, but there's a big difference, and I think most law firms nationally are taking the stance that we will advise on how to, prepare the application, but we won't file it for you because there's liability that attaches to that way above and beyond just advising on what goes into it. So to the extent you're reaching out, expect that the answer is going to be, we'll tell you kind of how to navigate it, how to, chart through it, et cetera, but we're not going to actually do the filing. That's going to be up to you to take on. So, but it's not, I don't envision this as an expensive process unless you have 4,000 different stockholders and you've got to, go through everything else, but we haven't seen that quite yet.
Same question for everyone.
No. Yeah, I think I'll echo the same. For us, we tend to take advantage of the opportunity when we're meeting with clients on other matters, whether it's corporate filings or corporate tax returns, to say, hey, by the way, did you know this? And then include it as part of that same scope, because we have a lot of the information already there, so it's not an added fee. It's already part of the service. When someone has come to us with that request alone, generally we just give them the direction on take a look first and then let us know if you have questions. And usually it's pretty simple questions that we can address pretty easily through an email. So there's usually not a fee for that either. There's a couple services that we found that we use now even for other purposes that e-file it for you, and it charges like $50 or so. But I've gone through it just to see if this is quicker than going in the web. It just pulls up the website on that same platform, so you're doing the same thing. So even then, I would recommend the website's free. Do it through there. And if you have, again, a more complex situation, that's usually, I think, when it's worth the fee of going to an attorney or a consultant or a CPA, whoever you use. Otherwise, I'd say 90% of them of the cases are pretty straightforward.
Yeah, double down on all of that. But as a consultant, I mean, it could be just a consultation call with us, or if you wanted someone to handhold you through the process, it may be just an hour of my time. Anyone who's a sole proprietor or a, partnership, I don't think I would pay $8,000 with a lawyer to have him do it. Sorry. Um, but if you have a more complicated situation, I mean, there's nothing better than peace of mind. And sometimes that money is best spent knowing that you did it right, and that you can blame it on somebody else, maybe. I know you don't file it, but yeah, that's my feedback.
Yeah, as a financial coach, I will not consult on that because I will coach my clients to get the information and go to where they need to go on that. I did have a small business group that didn't know anything about this. I told them I was going to be here today, and they were like, "What's this about?" So I started telling them. It got them intrigued and interested, and moved them in the right directions to get it done. And that's the piece that I really work on, is getting you to get it done.
Rochelle, you had a question?
There's like, what was the, like, process look like? So I know how, like you said, that like, it's hard to kind of like allow the application. What's the, like, somebody, get to see that?
It wasn't that long. So Rochelle's question was, what is the approval process and how long did it take? Once I hit submit, the email address that I put in there for my business received it, I think within a day or so. It wasn't that long. It was very quick for it. So it is an email confirmation that comes back that it's been taken care of, and that's been put into a folder. So that way, if anyone comes, I have it. So, but yeah, it was very quick, very quick. Yes.
So it sounds like there's extra video, you can go on to the portal, the video.
The question was, is there videos when you go onto the website? Yes, when you go onto the website, there are 2 videos that are available, and I listened to them. They're very good. They're a little dry, I would say. I'm gonna go with Alex on this. Her and I are gonna, I'm gonna hand it to her in a second, but a little dry, but it really did walk through. It made me feel comfortable, and then I could go right into the process and start doing it. So it was very easy.
Yeah. So similar, went through the online videos, answered a lot of my questions, but I still had questions. I mean, this was a relatively new thing. I know when Eduardo sent me down, we were having a meeting and he said, "I have this BOI meeting coming up." I'm like, "What is that? How did I not know about this?" So really wanting to understand what the process is, and the videos did help, but I can't emphasize enough how important these kinds of events are, because there were so many more questions answered here that weren't in those videos, where now I feel confident I did it right, where before I was like, I think I did it right. So, and then I also have to file one, I think, for my partnership that I have with another business. So now I have some more clarity around that.
Question for Brian. Remember you said, if the applicant have FINSA number, it's much easier. So how is that?
Well, if you have the service company that's filing it, right, that's a good example. Or I have one as well. That way they can just give you their number. It has X amount of digits instead of me having to give you a copy of my license or my passport or whatever, which I'm probably not inclined to do that. And that's why I got the number, because I don't want to give that information out to folks, but I can give you the number. And then assuming I did it correctly, you put that number in, you're good to go. And same thing for the service company, right? They'll just say, call up whoever it is that helped you file it. Hey, who's the person? They say, hey, it's Bob, and here's his number, and you pop that right in. So it's a,
So what I meant is, I'm a tax preparer,
Mhm.
so I create a lot of companies. I'm the statutory agent. I don't have FINSA number. So if I create a FINSA number for myself
Mhm.
and I apply for the VOI for the companies that I'm the applicant for, will I just only put my FINSA number?
yes, yes.
And I don't need to put any of the owners or anything?
No, you'd still have to put in all the appropriate people, right? So your number, your number, the question is, if you have your FinCEN number, does that take away the requirement to do all the people? So each person has to put in, that's a beneficial owner, has to put in their information. For your, for your entry, your number would replace having to give that information. Yeah.
I have a real quick question. So I'm not allowed, I was told. Well, I hope this question, this question is relevant. So I know that it's for, if the Arizona Corporation Commission, I'm going to speak just for Arizona, if members are, if I went from 4 members of the LLC and now it's only 2, but the Corporation Commission still lists the 4, do we need to update the articles first before we do the BOI, or can we just still do the BOI with just the current information and later update the Corporation Commission? So which one will be the best way to do it?
Because you're the host, I'm only going to charge you 6,000. No, it's yeah, cheaper.
My good personal assistant.
Yeah. No, I mean, that's you're asked, the question is, do people not file updates to their articles? That never happens, right? No. So I don't know almost any small business that ever updates the articles on a timely basis, right? That's something I see every day that doesn't happen. And it just sits there for years and it never gets updated. So I would certainly want to sync up the filing with the state before you would go ahead, and ideally before you file it, because to the extent, for whatever reason, they decide to look into you and see, hey, there's 4 owners here and you only reported 2, that could raise some questions. Now, there's no linkage. Again, you're just saying the company's name, and they don't know based on the articles filed. At least in Arizona, you typically don't know who's got what percentage unless you stuck it in there, which most people don't do. So best practice, though, would be to make sure everything's updated from a corporate standpoint, then do your filing, and then you have no issues.
Is that something that most executives probably are going to want to get, or is that just only specific to the applicants?
I mean, anyone can get it. So if there's, anyone in the company, let's say the president is the one doing the filing, and he goes around to the executive officers and says, hey, you all need to give me your information. They have a choice. They can either give the president their stuff, or they can go and apply for a number and give them the number. Some people may be okay giving their information. Some want to, go get the number and give that only. So it's going to be, up to the individual. I think the question was, does the FinCEN number apply anywhere else? No, I think it's just specific to this particular regulation. So, yeah.
Any other question? Pedro?
So the question, asking for a friend, it's not you, not you. So the question is, there's a group of folks that formed an LLC, never did anything, and one person, not you, wants to jump out, ideally before the application's filed, so you don't have to be part of the application potentially. And so, yeah, if it hasn't been filed yet and you want to, pull yourself out, that can't hurt. I can tell you just recently, people sometimes, I'm not saying you're a theoretical group of people, but, having entities sit out there with multiple owners, we just had this happen. And again, I'm not saying this happens every day, but I had a partner who's from the UK, had a home here, had a partner, and who was literally was using that entity, unfortunately, to do some bad stuff. And so we finally, through a lot of, let's say, persuasion, got those 3 entities dissolved. But they were sitting out there, and he found out that some bad stuff was happening. And if you're on that LLC, and I know this goes beyond your question, but just a general free legal tip, I'm not going to charge you, but only 5. No. But yeah, the reality is that you sitting out there, you don't know what your partners are doing. And so I would caution against having, a dormant entity that you think nothing's happening and it's just sitting there, and others may have access or are representing that entity, getting bank accounts in that name, potentially putting you on the hook for stuff that you're not aware of. So I always encourage you, if it's just you, no big deal, right? But if you're with others, I would just shut that puppy down and certainly, make efforts to pull yourself off. And then if they file or do other things they shouldn't, then you're in the clear. Yeah.
Any other questions? Any questions online? If I could have my team send them to me. As we wait, any best practices, anything else that you would like for our audience or participants to know even from a consulting perspective, from a tax perspective. In general, I know that, Brian, this is just one piece of so many things that you do in corporate law, but any tips that you would like to share with everyone?
On this topic or just generally?
Well, I think in generally, and to some degree may relate it to this,
Yeah.
I think will be great.
Yeah, I mean, I'm a fan of doing, as you saw, a lot of these educational programs. So I think the best thing that entrepreneurs can do is just get themselves educated. There's a lot of things that maybe you don't know that you probably should know. Maybe best practices, laws are constantly changing. So this is by no means the only thing coming at you. There's a whole thing you may have seen about non-competes being outlawed. That hasn't happened yet, but there's lots of questions about that and how does that impact my business. If you've got those in place, there's new employment rules coming online, tax rules coming online. So I think just figuring out how to get some good content and good educational programming is a really good way to de-risk the business. It's risky enough, and good way to educate yourself and take those things off the plate, I think is a good tip.
Thank you. I think the biggest thing I would say is to schedule some time to do this. Set some time aside to actually sit down and watch the video and, like you said, educate yourself here, but also sit down and actually for the BOI or anything you're doing. As a business owner, it takes a lot of time to do some of this work, and it gets put on the back burner. So this is a really good time to be able to schedule in your schedule on a slower day of the week and put some time down, even an hour, to actually get it done. And after that, you're going to feel a lot better because we're halfway through the year and it needs to get done.
Thank you. A couple of things. I think one, if you're going through this process and you realize that you're exempt, that could change. So if, let's say, you're exempt because your revenues are over 5 million, that could change next year. So keep an eye on this. Keep an eye on updates as maybe there's regulation changes, statute changes over the next year. And second, I think to the point from earlier, I would recommend maybe annually doing some type of check-in, compliance, fiscal check-in, where there's a lot of great things out there now. There's the IRA, the Inflation Reduction Act, which this is a drop in the bucket compared to that massive thing. So there's a lot of benefits to businesses. There's a lot of changes, as well as was mentioned. There's changes with the exempt wages now that took effect this year. That's going into effect again next year. So for businesses out there, I recommend at least once a year connecting with a professional and making your list of questions and just checking in on items, and even leaving it open-ended on, what do I not know that you can tell me? That's I would recommend that, just because there's so many things out there that we see new clients when we onboard them that are essentially either leaving on the table or that they weren't aware of that could have got them in trouble. Luckily, it didn't. So I would recommend that.
I would say to my clients, this is a really good time to clean house. I think a lot of us have forgotten about businesses that we owned in the past. Maybe there's some entities out there. Maybe we haven't updated our address, etc. But this is a really great opportunity to have some, reason to do it before you file, so that you're not having to go back and refile and go through the burden of doing it over, or getting caught for misinformation. As we were talking, I was like, yeah, I have 2. And then I'm like, wait, no, there's more. There's more out there. And some of them I'm like, I don't even know those people anymore. So if you need help figuring out what you're still listed on, or if you're part of anything, there's organizations, there's websites. If it's in Arizona, the Commerce Authority has a lookup. So if you need anything, please feel free to reach out and I'll hook you up with those resources.
All right. Well, thank you so much. I know that we have participants from California, and there was a question, does this only pertain to Arizona? It pertains across the U.S. So thank you so much. Can we give them a round of applause, please? So thank you so much. I have a couple of slides that I want to show before we kind of move into the last piece of networking. And so we'll use a couple of events, and no, that's fine. You can still stay here. I mean, you can watch. We have other monitors and they're watching. So this Thursday, we have our Pride in Business networking mixer here in the same space, 5:30, 7:30. Please join us. There's a promo code there. This is in a partnership with JPEG. and continue to be connected with us. Our 7th BBB Industrious Women's Summit is also coming up, and access to capital summits as well, Empower Growth Search boot camps, and the list goes on. And these are exactly some of the things that we're continuing to do as we reposition the Better Business Bureau. Yes, we still, educate on scams, and we still are going to provide, support on the marketplace, but we're truly positioning ourselves to be able to support all businesses. And I also want to highlight our sponsor for today's event, Gabriel Gascas from Midwest Regional Bank. Thank you so much. So for our online, thank you so much for joining us. This session will be recorded, and all the information will be sent, as well as our participants here. For those that are still here in Phoenix, we will now move into networking until 8 p.m. And feel free to, stay, leave, but hopefully you'll stick around for a little bit more. Thank you so much, everyone.